So today we're going to explore a crucial question I've been getting a lot lately. Are you bullish or are you bearish on the market as we approach 2024? So this isn't just about predicting, stock market trends. It's really about aligning your investment strategy with your long-term financial goals, and understanding both sides of the market is going to be key in that. So let's delve a little bit deeper into the bullish perspective first. So the bulls are optimistic, really banking on a scenario where everything that's priced into the market for 2024 actually happens and actually materializes. This outlook really hinges on several factors: no significant economic slowdown, a continued decline in inflation, no unexpected hawkish moves from the Fed, and robust corporate earnings. So essentially, the bullish view anticipates that the S&P 500 ends up trading around 19 times its 2024 earnings, suggesting a modest yet steady growth in the market from where we are here today. But there's more. For the truly bullish, there's the concept of what's becoming known as Immaculate Disinflation. And this is essentially where inflation falls rapidly without slowing down economic growth. So it's an optimistic scenario that would see the Fed cutting rates not due to a slowdown, but because inflation is actually under control. In this case, we could see the S&P 500 trading or even surpassing that 5,000 level. It's important to remember that investing isn't about short-term speculations. As with anything in life, the importance of a steady, long-term plan is crucial. So this applies to your investments as well. Now, whether the market is bullish or bearish, having a solid long-term strategy is vital. And this means focusing on time in the market, not timing the market. It's about committing to your financial goals through both the ups and the downs. So keep in mind the financial world is complex and unpredictable, and staying informed, adaptable, and focused on those long-term objectives is key to navigating any of the uncertainties successfully, whatever 2024 is going to bring us. Now let's shift gears here a little bit and explore the bearish perspective, which is going to offer a stark contrast to the bullish outlook that we just went through. Understanding this viewpoint is crucial for a well-rounded investment strategy. The bearish argument for 2024 next year is really predicated on the fears of this year in 2023 starting to become a reality. It's a scenario where the market's optimism unravels and this underlying concerns, they start to take center stage. So let's break down the key elements of the bearish view. So first, we've got economic growth. The bears are predicting not just a slowdown, but an actual contraction in economic growth. With the Federal Reserve, ending one of the most aggressive rate hike cycles in recent history, the impact of those higher interest rates could shift not from just slowing growth, but rather to an outright economic contraction, potentially validating classic recession signals that we've had all year, like an inverted yield curve. So a yield curve plots out what bonds are paying. So for example, a 2-year bond might be paying 4%, and in theory, a 10-year bond should be paying more because you're locking up your money for longer. Well, this year, that curve has been inverted, meaning that the bonds, the 2-year bonds are now paying more than the 10-year bonds. Why is this? Well, the bond market believes rates are going to be lower 10 years from now. So next, we've got inflation. In this scenario, the decline in inflation this year comes to a screeching halt. So we've definitely seen a drop from the high levels of 21 and 22, but the bear case suggests that this disinflation won't continue. Inflation might stabilize at a rate above the Fed's target, leading to prolonged high interest rates in a scenario known as higher for longer, if you flick on the news, which would contribute to economic stagnation or stagflation, to throw in some more financial jargon at you. Now, another key factor is corporate earnings. The market might be optimistic about earnings growing next year, but on the other side of the coin, the bearish view warns of some potential disappointments ahead. Now, in this scenario, as companies face a slowing economy, their ability to cut costs without resorting to measures like layoffs, which would only, exacerbate economic contraction, they really start to become limited in what they can do. So, how bearish is this scenario? Well, looking back at where the S&P 500 started this year, it could give us a clue. We began at just under 3,800, so this bearish view really suggests that we could return to those levels. And while that might seem like a long way down, it was only about a month ago that the S&P 500 was flirting with breaking 4,000. So, what's changed since then? Because we are at 4,565 right now as I'm recording this on December 5th. Really the only thing that's changed is the market's view that the Fed will be more dovish than expected next year, meaning not only no rate hikes, but actual rate cuts. Now, if that expectation reversed and the Fed has to return to being hawkish, we could see a retracement of those levels, where we started 2023 at. Good financial planning is about creating a strategy that is resilient, it's adaptable, and most importantly, it's aligned with your long-term goals, regardless of the market conditions. The key here is to stay informed and remain patient. So whether you're leaning bearish or you're leaning bullish, remember, investing is a marathon. It's not a sprint. I know it's easy to get caught up in the daily fluctuations and the urge to time the market, but history has really shown us time and time again that it's not just about when you get in or when you get out of the market, it's about how long you stay invested. This approach can really help you navigate through market volatility and truly benefit from compound interest and ultimately stay on point. So as we head into 2024, if you got any questions, please reach out. Know that I'm man in the helm for everybody, and look forward to chatting with y'all soon. Take care. Once again, I'm Ben Barnhart, and I'm the founder of On Point CRNA and Barnhart Wealth Management. If you're interested in learning how we help our clients across the country with their money, head over to www.onpointcrna.com.